Hi, Mark Gordon. Wednesday, December 14th, 2011 at about 8:45 Pacific time. And wanted to show you the collapsing gold prices here. This is the GLD. And we were in this flag formation, and it was getting tighter and tighter and tighter. And I had told everybody that we were going to have a resolution of some sort, either to the upside or the downside. It looked like we were going to have an upside resolution because we were holding firm here at this blue line, the 50-day moving average, which coincided here with this lower trend line. So there was some support down here, but we did break to the downside on a gap here and, on Monday, and came down to this lower Bollinger Band, this gray area here, and that did not hold either. And yesterday we fell even more. We did close above this 200-day moving average, the black line, which is a typical area of support. But today we crashed right through that, gapping down again this morning, and now down near the lows here on very heavy volume. We had very heavy volume yesterday as well. It's early in the day, so this volume could eclipse yesterday's volume. Is this the bottom? We just don't know. Right here at this previous break low at the 154.19, that should have offered some buying support down there. But we got down to a low of 152.05 so far this morning. So really not much support here if prices want to go lower. This is a bad sign, breaking through all these support levels, but we are very oversold here. And when we look down here at the stochastics, anything under 20 is oversold. So we are very oversold here. And you can see that the stochastics did offer a point of a turnaround here when they got below 20 here, back here in September, October, and also back here in at the end of June or early July. So this could be a place where we do get some stabilization in prices and maybe run back up, but you never know right now. So the GLD is down about 3.25% as we look at it right now. And looking at a weekly chart of the GLD, we're down about 7.67% right now for the week. Ugly week here. Taking out this trend line that has been in place for about a year and a half. Every time we got down to this line, we got a nice rally back here, which we did back here in September, and rallied back up here to the upper trend line, and then pulled back here and did not hold it. Took it right out, something we haven't done in a long time, and also took out the 40-week moving average. We did get a little bit of bounce off this lower Bollinger Band on the weekly chart at the 151.79 is where that lower Bollinger Band is, and got a little bounce off of it so far this morning. Let's see if that holds. But weekly chart breaking down. Now, certainly taking out the 154.19 was a bad sign. That was the previous break low, which should have offered some support. It did not. So technically, on a weekly chart, we are now in a weekly downtrend by taking that low out. Now, even more troubling, when we go to a monthly chart, we can see that we have taken out this blue line, which is the 10-month moving average. Now, what's important is this average line has held here. The only time we got below this was way back in early 2009, where we dipped just below it there, but rallied back here. And we were, of course, went through a major correction here that happened in the fall of '08, and spent about about 5 months underneath this line. Actually 4 months underneath this line here during that correction, and then when early '09 came in, we got above that and stayed above that now. So this is has been in place for almost 2 years. Breaking this line is a psychological damage to the markets right now, and so far for the month we're down to 9.71%. So the next logical point, of course, of support will be this green dotted line, which is the 20-month moving average at 142.67, 142.67 on the GLD. So daily, weekly, and now monthly charts breaking down on the GLD. And some traders are speculating that this is the paper gold market starting to break down because of all the uncertainty with the MF Global bankruptcy and the seizure of client accounts. The possibility that a lot of this paper gold is promised to other entities. There's a long daisy chain of just promises. Anyways, that's all speculation. There's many problems with paper gold and any paper assets right now. Should that be the case, and it's a real thing here, we could get a very severe pullback. If it's like the 08-09 scenario, taking us back here to the 40-month moving average here, which is currently at about 120. That would be quite a steep correction. But you never know. So it's just best to lighten up your load, get out of the way of any kind of a major downtrend here, and just wait on the sidelines until things improve.